Did you know that in 2025, some important changes to Social Security could impact how much money you take home each month? Whether you're already receiving benefits or planning for retirement, these adjustments could significantly affect your finances. From a cost of living increase to changes in taxes and eligibility rules, understanding these updates is crucial to making the most of your Social Security. In this video, we'll dive into 5 key changes that are set to happen in 2025 and explain exactly how they'll affect you. We'll cover everything from the new benefit adjustments to the way your income could be taxed so you can be prepared for what's ahead. Make sure to stick around until the end, as we'll provide you with everything you need to know to navigate these changes and ensure you're getting the most out of your Social Security benefits. Welcome to Financial Area, your go-to source for expert financial tips and updates. If you want to stay informed and make smarter financial decisions, hit that like button and subscribe to our channel for more valuable insights. In 2025, Social Security benefits will see a 2.5% cost of living adjustment, commonly known as COLA. This increase means that retirees will receive, on average, an additional $50 per month. This adjustment is a response to the lower inflation rates observed in recent years, offering a smaller increase than what we've seen in previous years. While this is a welcome change for many retirees, it still falls short of some of the larger COLA increases we've experienced during times of higher inflation. For widows and widowers, benefits will also see a slight increase, though it won't be as significant as what the general retiree population will experience. This COLA increase helps to counterbalance the rising costs of goods and services, but it's important to note that it doesn't always fully match the pace of inflation, leaving many retirees facing tight budgets despite the boost. This adjustment is particularly meaningful for those living on a fixed income, as it helps to maintain their purchasing power in a world where prices are continuously rising. However, it's also a reminder that Social Security alone may not be enough to cover all living expenses in retirement. As we look ahead, it's crucial for current and future beneficiaries to understand how these increases work and to plan accordingly for other potential financial needs during retirement. In 2025, the maximum amount of income subject to Social Security taxes will rise to $176,100. This increase is significant, as it adjusts the income cap that determines how much of an individual's earnings are taxed for Social Security purposes. Employees will continue to contribute 6.2% of their income towards Social Security taxes, but this contribution will only apply to earnings up to the new maximum of $176,100. Once an individual's income exceeds this threshold, they will no longer pay Social Security taxes on the additional earnings. However, they will still be subject to the 1.45% Medicare tax, which applies to all income regardless of the amount. For high earners, the changes extend beyond the base Social Security tax. Individuals who earn more than $200,000 for single filers or $250,000 for married couples will face an additional Medicare tax of 0.9% on the income that exceeds these thresholds. This is a significant increase for those with higher incomes, as it means they will pay more into Medicare, which funds health services for older adults. While Social Security taxes are capped, the additional Medicare tax can lead to a substantial increase in tax liability for high earners, depending on their income level. These adjustments affect both employees and employers, as businesses must also contribute their portion of the Social Security and Medicare taxes. For those in higher income brackets, this change could impact their overall financial planning, including retirement savings and investment strategies. The increase in the maximum taxable earnings will likely lead to higher taxes for many high earners, but it also has implications for the amount of benefits that will be received during retirement. As the cap increases, higher earners will contribute more over the course of their careers, which could result in higher benefits when they eventually begin claiming Social Security in retirement. This is important to note for those planning for their future, as it affects both their immediate tax obligations and their long-term retirement plans. In 2025, a significant shift will occur in the way Social Security benefits are taxed, with around 15% of beneficiaries facing income tax obligations on their benefits based on what's called provisional income. Provisional income is a calculation that includes your adjusted gross income, any tax-exempt interest you may have, and half of your Social Security benefits. The taxability of your Social Security benefits depends on how much your provisional income exceeds certain thresholds. For single filers, if your provisional income is below $25,000, you won't owe any taxes on your Social Security benefits. However, once your provisional income falls between $25,000 and $34,000, 50% of your benefits become taxable. If your provisional income exceeds $34,000, up to 85% of your benefits will be taxed. Joint filers experience similar thresholds, with the first level of taxation starting at a combined provisional income of $32,000 and the second at $44,000. Beyond the higher threshold, 85% of benefits become taxable for joint filers. This change is particularly important for retirees who rely on Social Security as a major source of income. Depending on your overall income level, a portion of your benefits could become subject to taxation, which might be a surprise for those who assume their benefits are entirely tax-free. This tax burden can make a noticeable difference in the amount of money retirees receive each month. Additionally, for higher-income retirees, the taxation of Social Security benefits adds another layer to their financial planning. Many individuals may not fully anticipate how their other sources of income, like pensions or part-time work, will affect the amount of their Social Security benefits that are taxed. Understanding these thresholds and how provisional income is calculated can help beneficiaries plan for taxes and avoid unexpected surprises during tax season. So, let's quickly recap the 5 major Social Security changes coming in 2025 that you need to know. First, a 2.5% cost of living adjustment, COLA, will bring an average increase of $50 per month for retirees, helping to offset inflation. Next, the maximum taxable earnings limit will rise to $176,100, meaning higher earners will contribute more to Social Security and Medicare taxes. Third, more beneficiaries may face taxes on their Social Security benefits, with up to 85% of benefits becoming taxable depending on your income level. Fourth, to qualify for Social Security retirement benefits, you'll need to earn $1,810 per quarter in 2025, which is necessary to maintain your eligibility. And finally, the Social Security earnings test will impact those working while receiving benefits, with specific income limits affecting how much you can earn without reducing your monthly payout. These changes may seem small, but they can have a significant impact on your retirement planning. If you're nearing retirement, these adjustments could affect how much you receive, how much you pay in taxes, and even when you can start claiming your benefits. For those already receiving Social Security, understanding these changes will help you plan for future increases in your benefits and potential tax obligations. Whether you're a current retiree planning for retirement or still working and thinking about when to claim benefits, it's crucial to stay informed about how these changes will shape your financial future. While these changes might not radically transform Social Security, they could certainly affect your retirement strategy. If you're in the workforce, be aware of how the increased earnings cap and earnings test could influence your income. For retirees, make sure you're planning for the potential taxability of your benefits and adjusting your budget to account for any increases or decreases in your monthly payments. The bottom line is, staying informed and proactive is the best way to ensure you're fully prepared for what's ahead in 2025 and beyond. If you found this video helpful, don't forget to give it a thumbs up and subscribe to Financial Area for more insightful content on Social Security, retirement planning, and personal finance tips. If you have any questions about these changes, drop a comment below, and we'll be happy to help clarify anything. Also, feel free to share this video with friends or family who might need to know about these important Social Security updates. Thanks for watching, and we'll see you in the next video.